Picture this. You open your investing app and the chart looks like an EKG. Up, down, and your heart rate right there with it. Most beginners try to guess the perfect moment. The people who quietly get rich, they design a system that survives every moment. Today, I'm giving you that system, the handful of simple truths that turn beginners into confident investors. I'm saving the most misunderstood word in finance for last because it ties the whole machine together. I'm a civil engineer turned money nerd, and I invest the same way I used to design buildings. Constraints first, load paths next, feedback loops to keep the structure in spec. Bring that same energy to your portfolio even on a starter salary, and you don't need luck. You need a plan. Truth 1. Time in beats timing. Engineers don't guess the wind. They overbuild for it. Investing is no different. The enemy isn't volatility, it's missing the days when compounding does the quiet work. Best rule, pick a schedule you can actually stick to and stay in your seat through the noise. When markets drop, remember, some of the biggest up days happen right after the worst down days. If you bail, you miss the rebound. Write your drawdown script today. If market falls X, I keep buying on schedule. Pick your X. That one sentence turns panic into protocol. Truth 2. Compounding loves small and boring. You don't need a perfect start. You need a repeatable start. $25 a week or bi-weekly with your paycheck. The number that survives your worst Tuesday. Automate it. Think drip irrigation, not fire hose. You don't flood the field once a year. You drip always. That drip wins. Third truth. Fees are friction. A 1% annual fee sounds small until it eats decades of returns. Like gravel in your gears. Stick to broad, low-cost index funds for your core. Check the expense ratio before you buy, like checking a car's fuel economy. If two funds give the same exposure, pick the cheaper one. That's tailwind versus headwind every single day you own it. Here's the fourth truth. Diversify like a bridge, not a buzzword. A bridge doesn't stand because one beam is flawless. It stands because load paths are shared. Same with investing. Don't bet it all on one company, one sector or country. Start simple. A global stock index, a high-quality bond index. That combo gets most beginners 95% of the way there. Add extras only if they add something different. And if you can't explain a holding in your line, probably you don't need it. Fifth truth. Risk belongs on a timeline. Money you need soon can't ride big swings. Money you won't touch for a decade can. Set buckets by time horizon, not vibes. Short runway, safer stuff. Long runway, more growth. You're not predicting weather. You're designing how your bridge handles load. Sixth truth. Behavior beats brilliance. Your plan matters more than prediction. Decide your moves while calm, not mid-headline. Write 2 lines in your notes. If the market falls X, I keep buying on schedule. If my mix drifts Y% from target, I rebalance on date. That's it. Calendar it, follow it, and go live your life. Truth 7. Dollar cost average is your conveyor belt. Engineers don't fight gravity, they channel it. Dollar cost averaging channels your paycheck into the market on schedule. You buy more shares when prices are low, fewer shares when prices are high. No guessing, no drama. Prefer lump sum? Fine. It usually wins on paper, but if it makes you freeze, set a 12-20 week DCA window and get it done. Behaviorally, that's gold. Eighth truth. Keep allocation simple, rebalance on schedule. One core stock index, one core bond index, maybe 1 or 2 purposeful tilts. Rebalance annually or semi-annually, not when the news gets loud. Add it to your calendar like a dentist's appointment. Tempted to tinker weekly? Right, no portfolio changes on headline days. You're building a bridge, not a roller coaster. If your job offers a match, capture it. That's free structural steel. Then use tax-advantaged accounts if you qualify. Extra beyond that, A regular taxable account still compounds. Account type is the container, allocation is the content. Don't put emergency money in a Roth just because it's trendy. Don't let long-term investments rot in cash just because they're inside the 401k. Truth 10. Separate buckets. Safety net versus future me. Your safety net is your shock absorber. Your future me is your engine. Emergencies hit safety net so you never have to panic sell investments. Growth compounds in future me and stays untouched. Name your accounts that way so you remember who does what. Let's look over 3 quick stories. Linda had 15 funds but no plan. She simplified it to 2 funds and the tiny Friday DCA. 6 months later she said, "I'm bored." That's what strong money feels like. Omar thought he was diversified with 5 tech funds. Looking better over them, he noticed an 80% overlap. Swapped to one broad index meant lower fees, less meddling, and real diversification. Michael ignored his employer's matched until he saw how it worked. Then he auto-increased contributions by 1% each quarter until he hit his comfort zone. Here's a build for tonight you can build in only 30 minutes. Open or rename your account Safety Net and Future Me. Choose one broad, low-cost stock index. Add a bond index if it helps you sleep. Set a weekly or bi-weekly auto-buy on payday. Write your drawdown script and rebalance rule. Log into your workplace plan and at least capture the match. Here's a stress test for you. Markets drop, your drawdown script fires. Contributions continue, allocations get checked on your calendar date. Red days aren't a reason to quit. They are sales on future returns. Stay in your seat. Before we land the plane, recap like a checklist. Time in is better than timing. Small, boring, automatic. Fees down. Diversify like beams, not stickers. Match risk to time. Behavior beats brilliance. DCA is your conveyor belt. Keep allocations simple. Rebalance on schedule. Use the right accounts in the right order. And separate safety net from future me. Your tiny move tonight. Set the smallest weekly auto-invest you'll actually keep. Name it Future Me. Then drop your drawdown script in the comments. If markets fall X, I'll read every one. In the next video, I'll give you a 5-minute Sunday dashboard. Jobs, inflation, interest rates, growth signals, so you can spot crosswinds early and keep your bridge steady. I'll see you there.